All right, what's going on, everybody? So this video is about um just the market review this past week that we traded, and it's all in hindsight, but essentially what you want to do is just review your week and see what you could have done or what could have or what is it that you were looking for at the times of market open when you decide to trade, right? So, as far as me, this is what we're gonna start from Friday and just kind of roll back down to Tuesday because I don't like to trade Mondays, but we can just kind of review the market from there. So, all right. So essentially, what I do is I don't look at the market as too far back. I do look at the previous days and everything, but let's say we're reviewing Friday. I'm on a 15-minute time frame, which is what I kind of use the market for, like as far as to review it. You do want to check your daily, your weekly, do that kind of analysis, but I'm not gonna do that here. I'm just gonna go through the 15 and the time frames below, 5 minute, 3 minute, and 1 minute. So right here, what I would do is, I'll probably be on the computer around 7:30 my time, um, and that's where we're going from, right? So what I would do is I mark down 9:30, even though 9:30 is not there yet, right? So we're pretending this push here has not happened, and we don't even have that candle at 9:30, right? So we have market open. That's essentially what you want to look for, right? You want to look for the market open. That's you don't. Me in my plan of trading, I don't want to get into trades before that time, okay? Because around that time is where you want to look for a, a good trade to get into, right? So this is what we're looking at right now. So we don't have this actual candle here and anything above. We're focused on um the previous things that have happened or that has happened through London and Asian session, right? So we're on a 5 minute time frame. We can tell that around on London there was a bit of consolidation. We do have a high, a low, a higher high. So this high broke above Asian, right? And then we kind of create a lower high here. We have a low and then a lower high coming down. So this is what I would look for here. This will be a key thing for me. We have a sweep down here, right? Coming into our session. So we have a sweep, because there was a good push here and then a nice push to the bottom, and we created a new low. So I'll mark my what I call things that are like important as far as important moves for me, right? And then all right, and then market comes, the market opens, so I'll remove the line, right? We'll remove the line here. So the market opens, we see this big push, right? We don't know what's happening. All we know is that the market has opened and we have a volatile candle, right? So some of us are gonna try to get in that candle. Some of us are gonna wait, right? So we saw automatically this candle broke above this high, right? Then it broke above this high, right? So this high and this high, they're not so different. It's a small distance from each other, so we can say these are almost relative equal highs. But I'm gonna utilize this high here, right? This high right here. This is what I want to see. So I'll use this high. I wait for the candle to close. I wait for that big volatile candle to close, right? And we're looking at 5 minute candles here. Oh, I'm sorry, no. This big candle. We'll jump to the 3 minute. 3 minute right here. So, all right. to make it clear, because everything's happening in hindsight here, right? It's happening all at once. When we see this market candle open, right, this big volatile candle, and we see it, move, pretty much sweeping highs. You gotta understand. I say this every time. In our session, I want to see sweeps. In order for me to try to find an entry, I want to see sweeps. I always say this. I want to see a sweep below, a sweep above, or a sweep above, or a sweep below, because we want to let the market play out and show you its intended move, what it really wants to do. So essentially, for me, this small move down here was a fake out. It came. It has a high, a low, a lower high, a lower low, broke below this here. So if this big candle wouldn't have happened, we expect a higher low to happen, and then we keep pushing down, right? So there was probably some sellers right here who sold, had stops above, and then they thought this probably was like a small retracement or something. Some people would have utilized this fair value gap as an entry, or as something. Oh, it's not gonna cross this area. We're gonna keep going low, and then the big push happens, right? The volatile push happens. So around this area, this is where you want to utilize the 5 minute, the 3 minute, and the 1 minute, when you want to start looking for something when you see this big candle happening, right? Now, keeping in mind that the market moves in 4 specific ways, so you gotta combine these things together and realize. So we were consolidating between London. We had a fake out, then we had a big push to the top. There's an expansion move coming. We're probably going to be bullish for a certain amount of time, right? We have an expansion. So now what I'm looking for is a beautiful entry, right? An entry to I'm figuring, as the candles are moving and the time is running out, I'm trying to figure out what time frame is better for me at that time. So if I jump down to from the 5 minute to the 3 minute, as this candle is pushing, as it's closing, and I see it closes above these areas, I'm gonna look at what essentially is called displacement here, right? You gotta have an eyesight for it. You can practice on it. Use this video to practice, or look at some ICT videos and go from there, right? So we have displacement, and then we have this nice pullback. With this nice pullback, we leave a fair value gap here, and then an inverted fair value gap here. But I'm looking for something different, right? That you got your fair value gap traders, and you got order block traders, and whatever, right? So what I see is 3 beautiful candles to the push, like a push high, and we have 1 order block right here. It's my order block, and I think ICT does it from the bodies, but I'm wicking. I'm doing it from the wicks. Okay, so this is my order block here. Just call it OB, right? That's my order block. Now, what happens is I want price to come back down to this order block in order for me to enter, right? For me to find a bullish position or something, to keep going up. So this is what I would do. I put my stops below the order block. I put my entry right at the wick, right? Let me just kind of scoot the order block over here a little bit. Lock it. So this is what this would look like, right? And we're going candle by candle. So my take profit mentally, because I have a mental plan, right? My plan is to accumulate 200 to 400 bucks, as I'm doing my challenge, right? But let's say it's not me. Let's say it's you, right? Let's say it's you taking this trade. This could be your first take profit, right? Take profit 1 is the first high. When price breaks above the first high, you can probably move your stops, trail your stops little by little, right? So this trade here itself, it's beautiful because we have the trigger. This is that candle that triggered you in. You went negative for a little bit. Then you have the next candle above. Then you have a next candle and next candle. And we're looking at a 3-minute time frame, right? Another candle and then another candle. So we have 1, 2, 3, 4, 5 candles. 5 times 3, that's 15 minutes. You were in a trade for about 15 minutes and you took around 65.8 points, right? And you had a small, a short stop loss about 25.8 points. Now we're looking at a 3-to-1 here. We have easy a 3-to-1 trade. Now, could you have hold it longer? Of course, you could have hold it longer if you're just trading your stop loss, right? You're trading and you're trading, but we want to be realistic, right? Realistic here is just at the first high, once price breaks above, we take profit, or you can just trail your stop loss. Doesn't matter. But this here is what happened on Friday, and this is what your eyes should be looking for. Now, as far as depending on your kind of trading, right? Because order blocks essentially is like it's kind of like supply and demand, right? It's like supply and demand. We have the break below, we have a break above, and then we have a pullback towards this zone, right? And here in this zone, we were triggered in. There was no action. You were not in negative for. You were in negative for 1 candle, and I don't even know if this candle went as low as this for a long time, right? So it's a 3-minute candle. Every other candle just pushed you higher and higher. So I decided to make this video because I want to show you guys what I'm looking for in the mornings. Right? What I'm looking for in the mornings and open. I don't like to get in trades before because it's too dangerous sometimes. Because when market opens, if you're not on the right side of the spectrum, then you're gonna end up getting toasted or cooked, and that is not something we're looking for, right? So now let's go back to the 5-minute, and this is what it looks like, right? So we did have a beautiful push to the top, right? None of us knew that it was going to go that high until we saw it, building and building. And we were like, okay, look at the past, and then you probably see where it's going, right? But at least this high here was taken out. This was a beautiful trade. And it happens at your time frame, at where you want to, trade, the time that you want to trade. This was a beautiful trade. You could took it and got out, right? So that's why I'm making this video. Now let's go to Thursday. Same thing on Thursday. We're looking for open time, right? We're looking for market open at I'm sorry, not 8:30. It's 9:30. Here we go. This is market open. Now remember, I am doing this on hindsight, but essentially what you want to do is train your brain or your eyes to see this happen while it's happening live. And it's not, it's like once you start looking for these things, it's beautiful. You can take trades and stuff, like it's no issue. But what we're looking for is that, right? So just here looking at this trade here, this is what you could have done on a 5 minute. Here's a low. Hold on. Let me remove this first. The line. The only reason I'm putting it is because I just want to make sure that we're on the same page about looking at the market at a specific time. So we have a low here. We have market open, right? It wasn't as volatile. Started getting volatile a couple minutes after, right? But we have a low here, right? And not every entry is gonna be perfect. Not every entry is gonna be perfect. That's why you gotta look for it live, right? So market, we have a low. This hasn't happened, right? So let's do it like it hasn't happened. So we have the low, right? We have market open. The market is happening at the time. I see London. We have a high. We have a low. We have a lower high. This high went above this one, so we had a small sweep. We have a lower, a low, a lower high, and then you see this right here. This low breaks this low. So I want to mark it. I want to mark that. Boom. So price breaks below low. And this is market open here. This candle's happening, and then we got that push to the top, right? Price breaks above. Now this could easily confuse anyone, right? If you're looking at this, you're like, oh, we swept the high on London, and we're probably looking for buys, right? We're probably looking for buys because we have a push to the top. So we're not just gonna automatically be like, oh, we're gonna blindly enter. No, we're looking for something that indicates that we are going up. I don't see any just one bullish candle. I don't see a set of bullish candles. I don't see 3 bullish candles. I see 1 bullish candle. Then I see the next candle is a bearish candle. So we'll jump down, because we want to be going back and forth at the time through our candles, right? Through our see through. All right, this is where entry. Oh, this is where, you know what I'm saying? We're looking for movements. We're looking for movements, right? So when we jump down to a 3 minute, now we see 3 bullish candles. We see a bearish candle, then a bullish candle that's closing lower, and then we have a lower candle. Okay, so essentially, all right, we are looking in, because we don't know what the market is doing, right? But this, we were like, all right, so we have a fair value gap here. We could probably enter a buy or whatever, right? But you want to wait for the market. You want to wait for the market to do something, right? So then we go for the next one. Oh, we have a lower candle. Now we broke below this low. So we remove this. You want to be looking at this stuff, because this is actual things that could happen. You're not gonna always be 100% on it, but you learn. You learn from these things. As long as you haven't got in the trade, it's better to miss a trade, right? It's better to miss a trade than to lose money, right? Now, in hindsight, we know that it's going down, but while you're in the trade, you got to be very careful and just not blindly get in. Or while you're in the live market, you want to be careful and just not blindly get in. I don't like to get in until I feel safe about it, right? So I switched this to price broke above this high. to me now, once we close, we actually closed below here, so we closed below this low. That turns into what I call displacement. Now, does that mean that I get into a trade? No, it doesn't. But here's where you utilize your tactics, right? This is where you utilize either your depending on how you trade. Some use fair value gaps, some use order blocks. In this one, it should have been a beautiful fair value gap right here, right? And how, like, once we see this low here at this point, right? We got the fair value gap. We just want price to come back and push up there, right? Because he pushed with this candle, but I would have probably missed it because I'm waiting for the full low to be created. In order for a full low, you need to have 3 candles, right? So that's that candle, and with this push, it gives you about three different times to enter. Actually, even a fourth one here to enter at that price range, right? So this is where your entry is at. This is where your stop loss is at, right here. I don't think price is gonna go above this high here. So you just put your stops above, right? And you want to maintain your risk management, right? Your risk management. So that's that. All that is up to you. I'm just showing you what I'm looking for, right? Here's entry, and then we go back. We look at Asian range. We have the low here. We could target this low here. We have another low right here. When I target lows, I don't target wicks. I target candles. So I'll target the candle, and then that could have been a beautiful trade for us. Would it have gone completely? Probably not. We would probably have pulled back here, and realistically we would probably get out right here. But it's a nice trade right here. Now what we got in a 3 minute. This is what you want to utilize: 5, 3, and 1, because you're not always gonna find a trade. You can find a trade within the 5 minute, but it's just there's more room for risk. Like, you can risk way more in a bigger time frame than in a smaller time frame. You can more or less find like sniper entries, and when you find a sniper entry, your risk is very low, right? So depending on your risk management, here it's a 61 point stop loss, but it's 178 points to the downside. So you could have had a beautiful trade right there, and that's Thursday, right? And this is what we were looking for. The reason I don't get in way before the market is because I want to see what's going to happen on market open. But let's say the way we saw earlier, right? It was this low broke by this, and then this high broke, and we thought we were going to have a trade to the top, right? Let's say we would have took a trade right here on that fair value gap, and we would have smoked right here, right? That's cool. We would have had one loss, but if you know how to understand that the market's going low, you're like, all right, the market's is about to just drop. Then you would have been like, okay, then let me look for another entry to the downside, and that loss that you had there wouldn't have mattered, right? Because at the end of the day, you would have caught a short and made your money back. So now let's look at Wednesday. I don't want to make the video too long, but I just want to show you what we're looking at, right? So we find 9:30 here with this big push. This is market open. Here's what we're looking at. We saw a low. Here's the swept right here. We swept, and right here there's a high. Right here, this is a little high. Boom. We broke above that. Right. You can just mark them if you want. Depends how you feel about it. But here's this consolidation. Here's a push. If you want to look at it that way, if you look at it on a smaller time frame, you can see it clearly. Right, there was a little consolidation around this area. Right, we had a small little push. Right, we had a push to the upside. We came to this fair value gap or inverted fair value gap, and then pushed down. Right, pretty much kept going down. Right, so essentially what we're looking for is an entry around this area. Right, this is what we were looking for. It was a miss. It didn't happen. So just because it didn't happen doesn't mean that we can't find another entry. Right, we missed this one. It didn't come back to touch. It comes back to touch it eventually, right there, but we don't know that's gonna happen. Right, we see a low down here. We see price pull back up. We see choppiness here, and I know we all saw this choppiness. But if we were all confused around that area. I remember us being inside on the Zoom, and we were like, man, I don't know what's happening. In hindsight, we could clearly see it, but if we start looking at the market the way I'm telling you, more or less, we're gonna understand a little bit better, right? Now, I don't want to get in between everybody's trading style because I know everybody trades different. A lot of y'all trade very different. But if you look at the market the way I'm telling you, you might see, it's just kind of to help you see the market a little bit better, right? So we have this low that swept, that pullback, right? We could look for another entry. Then we have another low. We broke below this low here, right here, right? We did leave a fair value gap right here. Right here. It does fill in, right? This could have been a trade right here. We get in around this area, pull stops right above here on the not above the wick, but on the candle, and that's just me, right? But you could probably have put it above, put it here, and then look at the previous in the past, see where you can target. And remember, I don't target wicks, I target candles. So there we go. Price went, hold on. There we go. Price, if you would have held it, you don't have to hold it. I have a goal in mind, $200, $400. Once I get that, I'm getting out. Now later down the line, as I pass my challenge and I start, having higher goals of maybe like an $800 day or $1,000 day, then I probably hold my trades a little longer. But this here is a 101 right here. At this point, it's a 1-to-1. You could have easily made some good money and got out. Price is gonna, because we saw choppiness the whole time. As long as he doesn't take you out your goal, you could have held it, and eventually it would have been down here at 106 points. We're looking at almost a 3-to-1. We're looking more like a 2.5, but 2.5 to 1. But that's a beautiful trade here too. And you're just targeting lows on this area, right? There's Wednesday right there. This was an invalid entry, but we found another entry where there was a lot of choppiness. We've seen a push and then actual retracement or reversal to the downside, right? That was a trade right there. It would have been way past our time, because lunch happens lunch, and then in the afternoon. But if you would have held it, that would have been beautiful. Or you could have just got out at 1-to-1. That would have been cool too. And not all trades are going to be beautiful. All trades, some of them are going to look pretty bad. But the thing is, what we want to do is to look at market at the right time. That's what we want to do. So here it's market open with this candle, right? We have it right here. We look at what the past has been doing. Normally I tell you guys, hey, this is what I think. I see this. I want to see sweeps. I want to see this. I want to see that, and I'll tell you what direction I think we're going. And I'm not 100% correct, but I'm not wrong either, because I've been pretty much telling you guys, oh, we're gonna go with this, we're gonna go there, and for the past week, and it has happened. And I've told Sergio before, previous times, hey, this is what I think is gonna happen, and it does happen. So I'm not saying my analysis are 100% on point, but they're pretty accurate, right? Because I try to read the market as it's being delivered. So I see a bit of consolidation, a nice low here. We have a break above, right? We have sweeps here around London. This is not our area. When we see a push towards like this gap here, then we have the open, and we have a push to the downside. We have sweeps here. We sweep, right? We're looking for a beautiful place to find entry, to see what we're doing, because right now all I know is we have swept Asian low in London. That's all I know. And we have good push to the downside, push back up. Okay, now we see this right here. All right, so this looks like I want to go up, right? So I put my I set my lines, right, just to let me know what's happening. All right, price broke below low. This here should be displacement for me. I'll jump to a 3 minute, see what a 3 minute does for me. Let's see where we're at. Here we're at. Okay, this is what we're looking at. I'm just looking at in a 3 minute time frame, right? So we have price coming down, we have the displacement and everything, right? So what I do know here at this point is I have a big push to the top. This is an expansion move, right? He broke above this high, he broke above this high. I'm looking for a fair value, right? A value so I can enter a trade, right? So me, and this is a trade I actually took, I know that when we have an expansion, we'll have a pullback. I entered on the third candle. I didn't enter in the FVG. I waited for the third candle to form. That's when I entered. I put my stops on 50% of this candle. That's what I did. But you essentially what your stop should be is down here, right? And I'll aim for a $200 to $400 trade. And this on Wednesday, I think I made 450 something bucks, and I got out. But this could have been your target here, and it would have been a beautiful trade for you. Right there. You see how we're looking at it in hindsight, and even though we already went through the week and stuff, you gotta remember what you're looking for, right? I already seen this big push to the bottom, right? We have a big push to the bottom. We swept two lows, right? We swept London and we swept Asian. So when I saw that to the bottom and we start pushing completely up and we break highs, It's an expansion. So we went from a consolidation, right? Consolidation, fake out, make people think we're going to the top, and then make them think we're settling, and then actually pull back, come back down, right? Come back down, and then push, like, this was a beautiful push, and then we start chopping up here, but it kept going up. This was a beautiful trade here, right there, right? Now let's go Tuesday. See what we see Tuesday. Here we go. Here's Tuesday. See where's market open? All right, right here with this push here. Now, this is this very small movement, so it's a consolidation on the uptrend. We have the push up, right? We have the push up. Did I take a trade on Tuesday? I think I might have took a trade on Tuesday, but I didn't take a trade. I'm gonna be honest with you guys. I didn't take a trade till one of these moves here, because I remember I hadn't got in. I don't remember getting in. I think I'll look through my week, but I don't 100% remember getting in. I think I capitalized. I took a nap after I got off the charts, woke up, and I capitalized on one of these moves here to the bottom. I seen there was some down push. Might have been around this area. Yeah, it might have been around lunchtime, because I remember I had to go pick up my kids from school. But all right, here's the move. I'm not gonna do the same thing from last time, but so we have the push, right? We have consolidation, we have expansion. Here it's a push, right? Probably get in on the 3-minute time frame or 1 minute. 3 minute or 1 minute, right? What we're looking for? We're looking for pullback. What we have? Pullback. Getting on the third candle. Broke above. Broke above highs. Boom. Pullback. This is the fair value, but it's not a valid one. It's just a big candle. Like, you gotta understand, if you know the way market is delivered, you have consolidation, expansion, and then you can have, once you have an expansion, you have a retracement, which is the pullback, and then you keep going. It does a retracement probably about 2-3 times before it actually starts to wear out and then reverse. And the same thing goes for the bottom. If it expands towards the bottom, it expands to the bottom, like here, expands to the bottom, has a pullback, keeps going, pullback, and this is on a 3-minute time frame. If you put it on a higher time frame, you could probably see smaller pullbacks, but when you go to lower time frames, you can see them. See, here's a pullback, dropping, a nice pullback. People will probably think that this is a reversal. It just keeps consistently going down. Pull back down, and this is what I call an expansion. This is a beautiful push to the downside, and then we have the reversal. We have the expansion, we have a pullback, and then something like that, right? All right, but if let's say you didn't get in on this candle, you actually waited and you got in on this. You see this candle push, probably could have got in right there, right? And then all we're looking for is a nice place where we can, right, take highs. Now, why I'm not showing a beautiful setup here is because there was no actual beautiful setup, and there was no setup that actually happened that was nice. But But if you, I mean, it's like you don't need to have a order block all the time or fair value gap. If you know there's consolidation and there's an expansion, there should be a retracement before another push. So you wait for that retracement before another push, and you can capitalize off of that. Right? Like this. Right here. Get on this candle and you're gonna capitalize on this push. Right? And then if you have a mental plan like me where you're not aiming for so much, you would have got this. Because I remember I took this trade. It was actually right here, and I capitalized on this. I think I took this trade. I don't know, but I'll look through my charts, and I think it was right here. If not, it was in one of those little drops here. But yeah, I think I made 150 something on Tuesday. Did I send you a picture on Tuesday? Was it on Tuesday?
I think so.
Right? I think I did take a trade here. I can't remember. It might have been in one of the little drops. But if you would have, you would have seen it in expansion. Here's a pullback. You enter on that push. There you go. Now, let's just keep it real. On Tuesday, there was no beautiful setups. But a lot of you did capitalize off of the push. And that's just a beautiful thing. You remember, it's consolidation to the upside. Really, this is the consolidation. Right here. This area. And then we have at 9:30 open. It pushes. Wait for that retracement, and then you go. But the other days we had beautiful trades. Now I'm not gonna go for Monday because I don't. Actually, this was Monday. That's why I don't trade Monday. That was Monday. All right, so I was confused a bit, but I hope this video helped you guys. I hope you understand the way I see the market, or the way I try to see the market. I do. This is pretty much what I use. So if you guys want to maybe write this down, what I'm looking for is what price did during Asian and London session. That's what I'm looking for. Another thing I'm looking for is what price is currently doing on New York session when I get on computer. When I get on the computer, right? What it's currently doing. And then another thing I'm doing is I wait for market open at 9:30 a.m. New York time. Right? From there, I try to look for liquidity sweeps. Then I look for a high. No, I look for a possible entry. Either using FVG order blocks or just a simple expansion with a pullback. That's what I do, y'all. I try to keep it as simple as possible, and that's what I want to share with this video, right? To try to keep it as simple as possible. Yeah, it's good to look at the the news. The news is always going to impact. It's good to look at certain places where like your highs or lows, or specific areas or ranges where you think are important, but they try to keep it as simple as possible. I always wait for 9:30 a.m. open. I do that, to find a good entry, right? I don't just want to use the volatile candle to get in. Sometimes there's a nice order block being left behind, or there's a nice fair value gap entry point where you can get in and still capitalize on a good move. Rather than risking getting in on the volatile candle and then you end up potentially losing, right? So that's just what I wanted to share with you guys. Hopefully, you guys enjoyed this quick review with me. If you guys like this video, then I'll probably start making some more of these throughout the week or whatever. But I hope you gain some I get some great pointers or advice from this. Thank you for watching.